What if I told you that while most investors are panicking about crypto volatility right now, the smartest money on Wall Street is quietly positioning itself for the biggest gains of 2026? In the next few minutes, I'm going to reveal 5 cryptocurrency projects that institutional investors, major crypto analysts, and market experts are accumulating right now before the next massive bull run. Stay with me because what I'm about to share could completely change your investment strategy. But before we jump into the analysis, if you find value in this content, smash that like button, subscribe to the channel, and hit the notification bell so you never miss our crypto analysis videos. Your support helps us bring you the best research and insights in the space. Coin number 1, Ethereum, the institutional powerhouse. Let's start with the foundation of decentralized finance, Ethereum. Now, I know what you're thinking. Ethereum isn't some hidden gem. It's the second largest cryptocurrency by market cap. But here's why the smartest investors are still accumulating ETH aggressively heading into 2026. First, let's talk about stablecoins. An incredible 53% of all stablecoin supply now lives on the Ethereum network. This is absolutely massive because stablecoins represent one of crypto's clearest product-market fits. Every transaction, every DeFi protocol, every institutional player moving money on-chain is generating fees, and 30% of all Ethereum fees come directly from stablecoin activity. Here's where it gets exciting. Ethereum has a deflationary mechanism through EIP 1559 that burns ETH with every transaction. As stablecoin usage grows 10 times, 20 times, or even more, the amount of ETH burned increases proportionally. This creates a supply shock that could send prices parabolic. Wall Street is building on Ethereum. BlackRock, Fidelity, JP Morgan, these institutions aren't experimenting on random layer 1s. They're choosing Ethereum because of its security, decentralization, and proven track record. The recent regulatory clarity in the United States, particularly with the Genesis Act and potential market structure legislation, heavily favors Ethereum and everything built on top of it. Multiple crypto analysts are projecting that Ethereum could reach $12,000 if it returns to its historical Bitcoin ratio, $22,000 if it revisits 2021 highs, and potentially even $62,000 if the ETH to BTC ratio hits 0.25. Even conservative estimates suggest substantial upside from current levels. The Layer 2 ecosystem built on Ethereum, including Arbitrum, Optimism, Base, and Polygon, is processing millions of transactions and bringing mainstream adoption while maintaining Ethereum as the settlement layer. This is the infrastructure layer of Web3, and Ethereum sits at the very center. Coin number 2, Solana, the user experience king. Moving to our second pick, Solana. If Ethereum is the institutional choice, Solana is the people's blockchain. And the numbers prove it. Solana has become the most used blockchain in crypto. In 2025, Solana's on-chain activity was 2 to 3 times greater than the entire rest of the industry combined. Let me repeat that. Solana alone processes more real transactions than every other blockchain combined. Why? Speed and cost. Transactions on Solana are lightning fast and cost fractions of a penny. Developers love building on Solana because the user experience is seamless. You don't need to wait 30 seconds and pay $20 in gas fees to make a swap or mint an NFT. This matters enormously for mainstream adoption. Real-world assets are exploding on Solana. The number of RWA holders on Solana recently surpassed 125,000. Traditional finance is discovering that Solana's infrastructure can handle the speed and scale they need for tokenizing stocks, treasury bills, and other financial instruments. Solana also benefits from a technical setup that analysts are comparing to silver's macro cup and handle pattern. There's a strong correlation between M2 money supply expansion and Solana price action. As global liquidity increases in 2026, which most macro analysts expect, Solana could see explosive price movement similar to what we witnessed in previous bull cycles. The Solana ecosystem includes thousands of developers, major partnerships with Visa and Shopify, and a community that's absolutely passionate about the technology. When the next wave of retail investors enters crypto, they'll gravitate toward chains that actually work, and Solana delivers that experience better than anyone. Coin number 3, Bitcoin, the macro foundation. Now let's talk about the king, Bitcoin. You might be wondering why Bitcoin is on an altcoin list, but here's the reality. Bitcoin is the gateway that determines the entire market's trajectory. Bitcoin is the foundation of the entire cryptocurrency market. When serious institutional money enters crypto, Bitcoin is always the first stop. The approval of spot Bitcoin ETFs has fundamentally changed the game. Institutions don't trade Bitcoin, they allocate to it. Companies like MicroStrategy, BlackRock, and Fidelity are building long-term positions measured in billions of dollars. Bitcoin's role in 2026 is critical because altcoin performance is heavily correlated to Bitcoin's market cycle. When Bitcoin is healthy and trending upward, that's when altcoins explode. Multiple crypto analysts predict Bitcoin could easily return to or exceed $140,000 in 2026. That might only be a 2x return, but for the institutional capital that drives the broader market, that 2x move in Bitcoin creates the liquidity and confidence for altcoins to deliver 5x, 10x, or even 20x returns. Bitcoin's scarcity narrative remains intact, with only 21 million coins ever to exist and the most recent halving reducing new supply. Bitcoin continues to demonstrate its value as digital gold. Countries are beginning to establish strategic Bitcoin reserves, and corporations are adding Bitcoin to their treasury holdings. This isn't speculation anymore. This is institutional adoption at scale. Coin number 4, Chainlink, the infrastructure backbone. Our fourth pick is Chainlink, and this one flies under the radar for many retail investors, but Wall Street insiders know exactly how critical this project is. Chainlink is far more than just an Oracle network, although its Oracle service alone secures tens of billions of dollars in DeFi protocols. Chainlink has evolved into a complete suite of decentralized services that enable smart contracts to interact with real-world data, off-chain computation, and cross-chain communication. Here's why this matters for 2026. Every major financial institution tokenizing real-world assets needs reliable, tamper-proof data feeds. Chainlink has partnerships with BlackRock, Swift, and the Depository Trust and Clearing Corporation, the infrastructure that processes trillions of dollars in traditional finance. When Wall Street brings treasury bills, corporate bonds, and stocks on-chain, they'll need Chainlink's infrastructure. The tokenomics of Chainlink are improving significantly. For years, Chainlink faced consistent sell pressure from team token unlocks, but that pressure is finally drying up. With reduced selling and increasing demand from institutional use cases, Chainlink's price action could finally reflect its fundamental value. Chainlink's cross-chain interoperability protocol, known as CCIP, enables secure communication between different blockchains. As the multi-chain future unfolds, projects that solve interoperability will become essential. Chainlink is positioning itself as that critical middleware layer. Coin number 5, Ondo, the RWA revolution. Our fifth and final pick is Ondo, a project that's flying under most people's radar but represents one of the most exciting narratives in crypto: the tokenization of real-world assets. Ondo focuses specifically on bringing institutional-grade traditional finance on-chain. We're talking about treasury bills, corporate bonds, money market funds, the massive multi-trillion-dollar traditional finance market. Ondo is building compliant, regulated products that allow institutions to experiment with crypto without taking excessive risk. The timing couldn't be better. The SEC's Project Crypto framework is providing regulatory clarity for tokenized securities. Ondo is positioning itself at the intersection of traditional finance and decentralized technology, and they're doing it the right way, with proper licensing, institutional partnerships, and regulatory compliance. Ondo has a major summit scheduled for early February 2026, where they're expected to announce significant partnerships and product launches. The real-world asset narrative is one of the strongest for institutional adoption because it bridges the gap between the old financial system and the new decentralized infrastructure. Think about this. When pensions, endowments, and major asset managers want exposure to tokenized securities, they need platforms like Ondo that meet their compliance and security requirements. This isn't speculative DeFi. This is bringing trillions of dollars of existing financial assets on-chain. The total addressable market is absolutely enormous, and Ondo is one of the best-positioned projects to capture that value. Thanks for watching, and I'll see you in the next video where we'll be breaking down the latest market trends and hidden opportunities. Until then, stay smart, stay strategic, and let's build wealth together in this incredible crypto revolution.